everybody. Welcome to Equity Guru. Today's interview with me, Chris Parry, El Foundero, is with Scott Burton, who is head hombre at FansUnite. Fans is the ticker symbol on the TSX. I didn't notice when you guys jumped to the TSX. That's quite the thing.
It was I think it was last July we made the move up to the TSX. Yeah, we CSE and then yeah, right up to the main board.
Leap to level. So when you guys started out, the sports betting market and esports betting and tournaments and those were kind of the rage of the hour. Over the last several years, the market has pivoted. I wouldn't say that FansUnite has pivoted so much, but the market itself in those sectors has kind of changed as regulations have changed, as realities have landed. How would you describe your company today as opposed to the thing that maybe people remember it for, which is being in that sports betting space?
Yeah, there's a few changes that happened since we merged in. So we merged my company into FansUnite in 2020. We had been in the esports betting space. Prior to that, we were in the sports betting space. FansUnite at the time was really McBookie. They had one B2C operation. Where they wanted to head was on the technology side. We had the technology, so we rolled into FansUnite. So then we became largely a technology-driven business, so building out B2B software and running a few B2C sites. We were early in the esports betting space, so I think we got our first license for esports betting in 2017. We were doing stuff in that space in 2014, 2015. And then a lot of things did change in that. Some was the boom was led by the craze of, I think, skin betting. So people using in-game items to bet with and sites making it very easy to do so. No regulation, no rules. And that took off, and it was billions of dollars of value worth of digital goods being sold or traded. When that crackdown came, a lot of people assumed that those same people would take that activity to real money gambling, and it just didn't happen in the way that people thought. So we pivoted away from the esports specifically. We still offer an esports product and had a pretty robust one, but really looked at what was going to happen in the US with the repeal of PASPA in 2018, which is allow sports betting. And so we focused on building out a technology platform for sports betting online casino and really didn't focus on the esports. And then in 2020, where are we at now? 2021, I guess, near the end, we acquired a large affiliate business in the US called American Affiliate. So that was kind of a real change for the business. People saw us as some B2C operations with the technology to support it. We moved into the affiliate space really because I like the space for a lot of reasons. In the US specifically, the money being spent on customer acquisition in that space and gambling in the US is huge. You have very big players trying to win, so FanDuel, DraftKings, Caesars, MGM. And it's not a great space to be an early stage startup company if you want to try and compete for customers. So we knew we didn't want to go B2C. So we like the mix of the technology and the affiliate. The affiliate has lots of room to grow because you still have, half the states to open up. You have big states to open up. You still have the wave of online casino to come after the sports betting wave, high margin business. So we moved heavily into that. And then as the market really changed, it's been a rough market for over a year probably. We had to adjust, and where in 2020, 2021, small cap growth stories, you could raise money, you could get good valuations. We had to move the business to being cash flow positive, so we've leaned heavily into the profitable affiliate side, and we've been divesting other pieces.
So divesting, you have McBookie. What did you pay for 1.5 million?
McBookie was 1 million cash, 2.2 total value. So it was 1 million cash and 1.2 million in FansUnite stock. That would have been in March of 2020 when Fans went public. That was the deal they did. So 2.2, and yeah, we sold it for over 5 million a couple of years later, or a few years later.
That's a nice return.
Yeah, it's a really good return. And the timing, I think the timing was good for us. and the value we got was really good, considering, you know, McBookie is really operating under a white label, so they don't have their own gaming license. They didn't have their own technology. We've been looking to move them to our platform, but then the sale process had started, so we didn't do that. But
The
to
space
get
in Britain is for gaming companies is getting a bit tight, isn't it?
It's getting tough. Yeah, I mean, the big headline will be you're not going to see gambling companies on Premier League jerseys anymore.
Hmm.
That's just one of the things. The amount of there's been this talk of the white paper coming, and the things in that are going to change the market quite a lot. Um, Advertising rules are going to change significantly, but what will impact operators, I think, a lot more is the player protections that are coming in. And we're not against player protections, but I would say some are fairly heavy-handed, and it's going to be, you know, a challenge to navigate for operators to maintain margins in that UK market. People will do it. That, you know, betting's not going to leave the UK.
Sure.
People will find ways, but again, when we wanted to focus, having a B2C operation, moving into a market with some pretty strong headwinds, we knew it was going to require more marketing money, being smarter, probably suffering some tightening on the top line and the margins. And we thought the time was great to take an offer of almost 8 times EBITDA.
Yeah, good deal. I mean, like if you were
Yeah,
coming out of the market right now, if you were IPOing today as a company that is heavily into the affiliate space, I think your valuation would be much higher than it is right now. I think you're way down a little bit due to your experience.
yeah, for sure. And I think as people see that and look to, there's plenty of comps, I guess, out there now in the public space, gambling.com, Catena Media, XL Media, and Playmaker here in Canada, getting better multiples than we are, because we, I think, had the mixed business. And as we simplify the business and really show the pieces that are making the money, I think we'll get some better multiples that we should be getting. Because if you look at the size of our affiliate business today, it's a good sized business. You know, over $20 million revenue last year and profitable with growing margin, with tons of potential and opportunity ahead. I think people will start to see that as we come out and do things like this and sort of refresh the story and get it out and just show kind of the assets we're sitting on the affiliate space, and then the things coming ahead. Yeah, I think we'll see that multiples creep up.
The I think there's probably a large part of the market that doesn't really understand what the affiliate side of things is, but I kind of point them back to the days of poker being the flavor of the month, you know, where every cable sports channel was all about guys in hoodies and sunglasses. But the companies where all of that activity was happening were trying to lead their clients to the paid product. And the guys that were doing all of that leading, all of that uh, uh, finding the consumers and feeding them to the big boys, they were making scads of cash. Like that was really where the money was to be made. It was the guys at the top were blowing through their revenues, trying to just hold market share. So here you are, 5, 6 years later, in the next space, sports betting, esports betting, being able to funnel clients to those big players and have them fight it out for who gets to be your best friend.
Yeah, absolutely. I remember it was years ago, one of the large operators in the space, you know, said if he'd gone back in time, because they were one of the bigger poker players in the early days, he said exactly that. He said if I could go back and someone asked me now, would you rather be the poker site or the affiliate? He's like, I would go be the affiliate.
Yeah.
And we really again like the space, especially because the US. It's a really unique time to be an affiliate space in the US because it's a brand new market. You're not going to get that again, where you get a market that size, that was very good at, right, you know, not allowing the activity for the most part, uh, open up and regulate state by state, and like I said, you just won't see that again. And being early and a leader in the U.S. affiliate space, so the unique thing about us again is the affiliates I mentioned, the comps that are public. There's obviously a lot of private ones, but they are spread. They're typically Europeans trying to break into the North American space, and it's quite different. Revenue models tend to be different, and they're struggling with some of the European business because the way regulations are changing there. We're pure play North American affiliate, which means we get higher CPAs. We've got more people on the ground than most other affiliates coming into the space, and we are a dominant position in the live activation space, which is we have boots on the ground during every sporting event in the casinos. We have multi-year contracts with the biggest casinos to go in and activate. There's no other company that activates at the level we do with live activation in the US.
I guess the question from those that are just discovering that this is an industry is, why wouldn't the big boys do it themselves? Or I would imagine that they do, but they've got other fish to fry.
Yeah, they've got so many other fish to fry. There's so many pieces to running a gaming operation, that you can't take it all in. Like I would argue that they could actually potentially be better if they took on payments themselves. They became the payment guys
Right.
because the amount of fees you spend on payments and the hurdles. But they're not. They don't want to be that space. They don't want to be. They want to run the operations, and there's a lot to go into that. So they don't go and take on everything because if you look at the KYC fees they pay on every user that signs up, you look at the payment fees. There's an argument that they could take all that in house because they have but it's just not their expertise, and you see diminishing returns when that happens because to be a really good affiliate, we need to be able to sell users to DraftKings, then to FanDuel, then to Caesars, then to MGM, and get paid over and over again. If you take that in house, you get the first time deposit from your own affiliate, and then they're not
You're
generating any
done.
more revenue.
Right.
I think an example is Penn buying Barstool. They effectively bought an affiliate business for a lot of money, and I think they're really struggling. Is that value still there? I would argue. So that's I think one of the reasons why they don't do that.
Got it. So what's the secret sauce on customer acquisition?
So the secret sauce we have, and it's fairly public for us, so I'm not giving anything away. Like we have the largest live activation team in North America, and I think when people typically think affiliates, it's digital, so online banner ads. We
Yep.
do that as well. We have a really good site called props.com that does just that. But we took, the guys who started betting here, the company that we acquired, uh, were kind of really unique in the fact that they looked at what's going on in the U.S. and said we can do this with people power, which a lot of people don't want to do. They hear about a lot of people, and everyone wants to get away from that.
Sure.
Jay and Jeremy came from a recruiting and hiring and training background, and they said that's what we're really good at, and we think there's an angle here, and they've done it really well. So I think we have up to 400 heroes on contract throughout 15 states now, contracts with the biggest groups. So we give a much better conversion rate than a digital affiliate. So somebody hits a banner and hits a site, you're going to get less than 50% get to deposit because there's so many friction points in gambling. So the
Sure.
KYC, the age, identity, location, then the payments. There's so many drop off points that people give up on the journey, with a person standing next to you who's an expert. So we're not hiring, the booth people that would be at a car trade show, right? We're not going to agencies. These are people that are employed by Betting Hero, trained how to use the apps. They know all the issues. They know the problems you're going to have if you're using an Android phone. So we're hitting, if we have someone in a facility who says yes, they want an app, we get 90% conversion. So it's a massive, massive number. So if you can change your conversion rates by a few percent, that's big. But if you can do it tens of percent, it's huge. So that's why the big operators continue to sign multi-year contracts with us. It's not just one weekend. We sign long-term contracts.
Got it. And so your margins, rather than compressing as they do in other areas of gambling, your margins, I guess, extend as more and more big players need what you got.
Yeah, so extend, and now because Betting Heroes hit such a good size and scale, we've had more face-to-face interactions with gamblers in the US than anybody, so probably well over 1 million. So Betting Heroes delivered over 350,000 first-time depositors in the last few years. So we've now started two other arms of the business. One's called Hero Research. So we're doing paid research now. So in every state that we're in, we'll do state reports. So we're getting paid subscriptions, but we also do bespoke work. So organizations that want to go into a new state, we'll go in and do market research for them. We can do product testing, so we can have their product in the hands of hundreds of heroes who know every betting app out there, give them feedback. So we're doing that type of work. And then Hero Hotline is now a sort of support and retention service and reactivation. So it's a big issue that customer complaints, because we hear all the customer complaints because we're
Mm-hmm.
standing with them, is the support. So if you have an issue depositing with FanDuel, you probably aren't going to get help immediately. You can email or try and get there. But by the time you get help, the moment may have passed. You may have won a
Yeah.
bet on the game. So our Hero Hotline, we can offer services more like real-time support in any state for multiple operators. So we can leverage our knowledge and our people and do work to either help people get onto the sites or reactivate. So we can use our people again, people power, and go out and try and reactivate users.
You know, it's interesting because I think over the last couple of years, there's been a couple of times that I've tried to set up betting accounts on various services. And, you know, it's right what you say, like sometimes the moment passes, you've got a few more things to do than you thought. And you think, you know what, I was only going to put 20 bucks on West Ham and they're already halfway through losing. So you're doing a service for many on both sides of the equation with what you've built. What do you think needs to happen for FansUnite to really kickstart the story in the eyes of the retail market? Like, what is the catalyst that you're looking forward to in the next 6 to 12 months?
Yeah, what we're really looking forward to is taking the business now this year to being a cash flowing profitable business. For many years, we were in heavy development mode. We were spending a lot in the cost side on the mainly on development, and that we're turning a corner now. And I think we this is the year where we turn that corner. And so I think once people see it, we've been saying it for a while, but now they're going to actually see it when the numbers start coming out, and we can show that we'll have a stronger balance sheet. We'll have cleaned up some of the debt. We will be moving to cash flow positive. So I think that's a big one. And then I think as we get out there more and more and talk about that side of the business, I think, again, as you mentioned, some people just don't understand the affiliate space, why it's so great. Because we still see it. We have half the US still to open up. We're still not really into Ontario because some affiliate issues going on there. So we have that to come. You still haven't had California, Texas, Florida open up. So when those open up, it's not if, it's when. So when those
Yeah.
go, huge bumps in revenue for us. And then the big one that is coming is the states tackle sports betting. Um, every sports betting operator wants people to go to the casino. You make a lot of money on casino players. So as states come back and then regulate online iGaming or online casino and allowing operators to open that up, that's a whole new group of people that we can sell or get onto apps for
I
our
would say a
partners.
larger group of people.
A larger group of people. It runs 365. The sports calendar has, ups and downs.
Yep.
Casino doesn't. And we get paid on a CPA, like a cost per acquisition. So a first time depositor puts money in, we get paid. The CPAs on a casino player are higher than a sports bettor. So when those start to open up and we're activating casino players, same sort of cost for us, but now we're getting more money. So the margins will increase with that as well,
Right.
and open up a massive market.
Do you guys play around with influencer marketing at all? I ask because I've spent a little time on Twitch, and I noticed the number of large accounts that are playing around with slots and things like that is large and getting larger.
Yeah, we don't do any. We've done some of our own, like had our own sort of podcast groups and stuff, but we don't pay influencers. It's a bit somewhat, I think it's on the edge of terms of service for a lot of places. So
Hmm.
we don't want to be on the edge of terms of service.
Right. Fair enough. Um, I I would say that you should be lauded for pivoting at the right time in the right direction, but folks don't always see it that way. Maybe they see it, a pivot as being a failure first time around. Um, what are your thoughts on the FansUnite brand as it pertains to the markets? Is it your pivot ripe for a rebrand, or does it still hold?
Yeah, I think there's questions that could be asked about a potential rebrand. I mean, as we work through this stuff, I think that's something we'll revisit. We've been really busy heads down executing on some of these big things like the divestiture, but it's something we'll come back and probably revisit as we sort of come out into the profitable business and really looking at what's driving the revenue and the cash flow.
I really like the fact that the sports betting space is one where if you're not in the big two or three, you're really struggling. You're spending a lot of money to take on Coke and Pepsi. I love the fact that you guys are benefiting from that rather than in the midst of that. And going forward, every time a state opens up, well, that's just another opportunity for you to add to the bottom line without having to really add to your costs. Do I have that pretty clear?
You know, it's exactly right because the issue that the U.S. creates a really challenging market for people because every state you can almost look at like a country, every individual country.
Yeah.
So a state's about to open up, you don't know what they're going to charge you for license fee. You don't know what the process is going to be. You don't know what the taxes are going to be. You don't know. There's some states that'll tie you to a brick and mortar, so the brick and mortars will get the skins. So you could be a FanDuel or DraftKings and a big state's opening up. You don't know if you'll even get in because they may say we're only giving 10 licenses and it's
Mhm.
a process. Whereas the affiliate, we know we can be there. Basically, we're there day one. We can be there day one, and we don't care which 10 get the license if they're going to do that. We just want competition, so we want more than one, but multiple. So the affiliate, none of that really bothers us. Whereas as an operator, some of the market access fees, and they're in the millions to just get access to the
Yeah.
market. And then you go to a state like New York where they tax it too much, and it just doesn't make sense. So,
Well, and then you're having to lobby
yeah,
to just to get to sit down in front of somebody, and then some senator's son is attached to something else. And I think that being able to move freely between those states and countries and rule sets and not have to go dropping a bunch of millions in every single one of them, I think you're on the exact right path. And it's it's the new Bodog.
yeah. Yeah, I mean, I think if you probably look into Bodog's history, I would imagine they operated hundreds of affiliate sites that people didn't realize, and made a lot of money and made money off their competitors. But it was also good market information. If you're sending users to competitors, you're getting information. But I think a lot of the private operators, the public ones aren't doing it, but a lot of the private ones, I think, behind the scenes are in the affiliate space.
Beauty, well, good space to be in, man. For those that don't know, you and I sit on the board at Altrincham FC, the illustrious, the attractive Canadians compared to those at Wrexham.
Yeah.
But man, how much fun is it to be on the board of a football club? Like,
Yeah, it is. It is fun. Yeah, I haven't had much time with what's going on to really put time in lately, but it's a lot of fun to be able to watch.
it's when you're dealing with numbers all day, it's nice to be able to sit down on the big screen and watch the kids kicking it around. All right,
Absolutely.
man. Well, look, I appreciate you having the time for us today. I know you're in the midst of a lot of to and fro, and news I expect is probably coming, and has been dropping regularly. I think that once people really get a good look at this space and really understand what it is that you're doing and see the comparables that are out there, to me, it's pretty clear that this is going in the right direction.
Thanks, Chris.